What's going on, everyone? Let's do a little stock market recap. So my name is D. Anthony with evolutiontraders.com. If you guys are interested in learning how to day trade options on a day in and day out basis, go become a lifetime gold member. You're going to get access to the private community as well as my watch list, strategies, daily, weekly training, so forth and so forth. But let's go ahead and take a look at the triple Qs. Now, let's not be surprised if we have a little bit of a pause, a little bit of a rest. And the only reason I'm saying that is let's start off by looking at the weekly time frame here. And this is looking at the NASDAQ 100, which is the triple Qs ETF. Now, if I bring out my drawing tool here and I kind of go back to our all-time highs here of 408, right? So if we kind of draw a line in the sand at 408, and then we have had obviously the big first drop and a little bit of support down here around that 300 to 320 range. And then we had this very nice aggressive 3-week rally. One thing that I do want to point out, if we kind of make another line in the sand here, is that this is a lower high. Just right about here, when we were trying to reclaim this 50-day moving average on the weekly time frame, there was a lot of bulls saying this was the drop. We had a nice bounce off of support, and here we go pushing back towards all-time highs. We were wrong on this assumption, anyone who thought that we were just going to go ahead and reclaim this, as we put in this second leg down. So as we put in this second leg down, we came closely to this 200-day moving average here on the weekly time frame, and that price was sitting at around $268. We came just a little bit shy, but it's close enough. Now, one thing that I do want to point out on, we have had a nice almost month and a half, 2-month rally here on overall tech in general. So if I kind of draw this line here to our last low, okay, and I draw this line back up to where we currently are standing, what does this look like to you? Staircase down, staircase down, staircase down. Now, this would become invalid if we have a little bit of a pullback, consolidate, push higher, and then take this high out. Now the chart pattern changes. Now we have put in from the overall drop of 408 down to around that 270 mark. We have put in a higher low on the overall weekly macro time frame. So if we just kind of look here where we're standing at, if you look at these green candles that we have, we've got 1, 2, 3, 4, 5 consecutive green weeks on the NASDAQ 100. We had a little bit of a pause here, but overall this was a little bit of a 3-week consolidation in this zone here. That zone was in the price of around 277 to around 297. So we had about a month's worth of consolidation here before we broke out. This was a fantastic move. If you were looking at the macro channels here and looking to swing trade something, what you would do would be taking this zone here and telling yourself, as long as we don't break below, I'm going to go ahead and sit long, and when we do break above, I'm going to add to my position and take at each weekly high until we put in a new low on the weekly time frame is when I would stop out of my position on the overall runners. That's a way to play it from a swing trading perspective. Again, that's a little bit hard to do just because you have to sit through a lot of day in and day out emotions, but could we push higher from here? It's entirely possible. My personal opinion, I think we need some sort of a pullback. We need some sort of a pullback, at least bare minimum to 320. At least bare minimum to 320. That's going to be the rising 5-day moving average on the weekly time frame. I personally would like to see a pullback into 300. I think that if we can get a pullback into 300, it would be an overall much more stronger move for the bull case scenario to start pushing up towards those highs. And the reason why I say that would be that the farther we get extended without a decent sized pullback, the harder the fall is going to be when we do get the pullback. So if we were to get a pullback here into the 320 zone, consolidate, push higher once more, I would still be a little cautious getting up into that 345 zone, that we could have a drastic pullback, which would definitely trap a lot of longs here. But if we kind of just slowly take a staircase down here, consolidate, slowly take a staircase down, consolidate, and get into this 300 to 305 range, consolidate, and then take out a high, I would like this a lot better, and it would be a much more healthy move to the upside for the bulls here. Again, consolidation here, and then get that massive breakthrough here all the way up to 389, consolidate mid-range, and then push higher. That would be an overall stronger move. But again, Do not take this off the table as we come into this upper channel here on the linear regression channel 50. That current price that we got tagged at was around $334. Again, I've been calling this out in Discord. That $328 to $334 zone was going to be very, very significant. That's the linear regression as well as the 100-day simple moving average on the weekly time frame. Now, if we kind of look at where we are sitting on the daily picture, this paints a little bit different story. Yes, this is a little bit of an indecision candle. However, today we did bounce off of the 5-day moving average, which I can blow this up for you guys. We did bounce off this 5-day moving average. You can see here 1, 2, 3, 4 days spent over the 5-day moving average consecutive after we gapped over here. Realistically, this is the only test that we've had in the past month here, down to this 10-day moving average. Had a little bit of a back test to the 10. This is very, very healthy. Gapped over the 5-day moving average, and we've been kind of grinding higher. Today's candlestick is telling me a little bit of indecision going on in the market. Okay, we do have some retail earnings coming up and going through. We're going to have to see what that's going to go ahead and do. But what I want to say is that this is an extremely aggressive push off the bottom. I think the NASDAQ 100 is up 21% from the lows. So this is a very, very good push up. I would not be surprised to see this pullback into this 318 range, 317 range. This pullback would be healthy. Okay, this pullback would be healthy. Okay, that's what we're going to want to see if we want to see a healthy overall market. Now, the last pullback that we had pulled into the 10-day moving average, which would put us at around $325. You could take your area of opportunity to try to bounce something off of 325, and if we do lose the 10-day moving average, exit that position for a very small risk. And if we don't go ahead and bounce off this zone, then we will continue to take out these highs of around 334. Now, again, a healthy pullback would be into the 300 to around 308 zone. Okay, this would be a healthy pullback for the bulls. I understand that that's going to trap a lot of longs out that are currently sitting. However, it's the most healthy thing for the overall market if this is going to continue. Now, we do have room to run into 342, which is the 200-day moving average. I would not also be surprised if the market does consolidate for 1 or 2 days, make one more breakout to at least tag 342 before having that pullback. I can see that happening as well. So we do want to be prepared on both sides of the market. All we are looking at going forward is a break to the top side over $334. That would take us to a price of around 338. Anything over 338, we can play into 341. Make sure you clean up your profits and take there, just because you do not want to get trapped in this zone on an aggressive pullback. Now, if the NASDAQ 100 does start to lose 329, I could see 327 as well as 325 backtest very, very fast. If that happens, you can look to your favorite stocks, short them through their low of day, just to make sure they've got enough room to run. I'll give you a quick example. Let's look at just a random stock in the NASDAQ 100. Let's say, for example, we're going to play devil's advocate here. And let's say, for example, the triple Qs start to lose 329, 328, which is the 5-day moving average. Let's look at something like AMD. What I would be looking for on AMD if the triple Qs did lose that area, and let me blow this up so we could see it a little bit better, is I would be looking for a washout through $98.25 to play into the zone of around 95. Anything below 95.71, I would look to play into 93. That's how I would play AMD if the triple Qs do lose that 5-day moving average. I would be looking for this low wick to be lost and play it right here into the 20-day moving average. And if we do get down here and we lose the 20-day moving average, I would look to play it into 93. Now, obviously, the macro flush on AMD does not come unless we lose $89. Below $89, it's got a lot of room down. But again, we don't want to play too aggressive. Just because we get a pullback, the market is still very, very strong. So I just want to keep that in mind. Until we lose a macro level of demand, the market is extremely strong. But that does not mean that we can't take advantage and try to make a little bit of money on these pullbacks. So again, we are not going to sit here and assume that we're going to go from $98 down to $70. We are going to play it one step at a time, from 98 to 95. 95 into 93, and anything below 89 is our macro flush. I hope that kind of makes sense. You guys can kind of go through, do some chart work on your own, kind of look at the favorite stocks that you like to play and draw out some different scenarios and set some zones and set some levels, so that way you are prepared. The number one thing that you want to be as a trader is to be prepared. You do not want to be caught with your pants around your ankles thinking that the market is just going higher and then the market takes a pullback. You do not want to think that the market is going to pull back, and if it goes higher, you are not prepared to take a trade to the long side. For example, if AMD was to break out over 102.33, I would play that into 104.50, and anything over 104.50 to 106.50, and your macro break on AMD would be anything over 106.50 into the 112 200-day moving average. I hope that makes sense. I would love to hear from you guys. Also join my Discord if you guys are looking for one-on-one coaching. Make sure to become a gold member, and I will see you guys all on the inside.